Welcome to Real Estate U with Letty Ann.
Hey there, welcome back to Real Estate U podcast with Letty Ann. And today I have the pleasure of talking with Trish Reedy. Trish is a mortgage broker with Trusted Lending Center, a local lender right here in the Kansas City metropolitan area. And so Trish, I've seen Trish through the entire, well, I've seen you before a lot. And then during the stay-at-home order, I was lucky enough to see you every 2 weeks on a Zoom call with the Overland Park Chamber. So we did, and we're still doing that via Zoom. So I still see Trish every other Wednesday on a Zoom call. But this is delightful. I haven't seen you in person.
I love seeing real people in the flesh.
Yeah,
and someday I'll get to hug you again.
Yay.
It'll be so great.
Well, we have disinfectant. We could walk through it.
Yeah,
but
we can figure that out.
And we're 6 feet apart here, folks, so we're minding our social distancing as well. But the beauty of it is really great to see you in person again.
You too.
And Trish has, and again, Trish is a mortgage broker. So a lot of people, I'll say, let me help you find a lender. And I typically give 2 to 3 names. That's just the right thing to do for a lot of different reasons. But they'll say, what do you mean a lender? And I'll say, a mortgage lender. So I have to be mindful. People think, we talk in lingo all the time. But so
most people don't do this every day.
Most people, what is it? It used to be every 7 years. Now it's moving towards every 10 years, it seems like.
Some people, it's once in a lifetime that they get to work with you and I.
That is true, and they'll never forget it.
No,
but hopefully it's not once in a lifetime. But actually, people moving is what we're talking about.
It's going to feel like it's a once in a lifetime experience for sure.
They're never going to forget us.
No.
Sorry, I just stepped on your foot. So what is a mortgage broker for, because it can be confusing. We're using terms that people only hear maybe once every 7 to 10 years.
Right. So if you're going to buy a house, you have to have money. Most people don't have $200, $300, $400, $500,000 in cash sitting around, so they need to get a loan, a mortgage loan. So they have to go to a lender to get approved for the loan that they will have the joy of paying back for anywhere from 10 to 30 years of their life. And there's lots of different places that you can go to get this financing. I recommend going to a mortgage broker, which is what I am, so that you can find the one person to go to, your one contact for the rest of your career needing money, who can shop for the best deal for your situation.
We almost need to say that again. Is that important?
Yes.
Say that again.
So what I do, I will shop for you. We work with 25 some different lenders, different investors. They all have their sweet spots. They're interested in different levels of risk, different types of properties, that sort of thing.
Different loans.
Different loans. So my job is to find the best spot for your situation, which is going to be different than your neighbor's situation and your best friend's situation. So we're going to talk about your specific financial situation, and I'm going to find the best loan for you that's out there.
With the age of the internet and everything's at our fingertips, and I'll just, even before they ask me, they're online, and I hate
Most
to
people
call
have
out,
Googled.
Yeah, how do I get a mortgage is probably a popular thing to Google, and
there's a lot of companies spending a lot of marketing dollars to be the first search for that, but that's not necessarily who you want to talk to.
Right. And let me just preface that by saying I always encourage a local lender. So, I want my client to do whatever they're most comfortable with, but I'm going to say I highly recommend a local lender for at least 15 of these reasons.
Yeah.
And I can name them.
Right. If something goes wrong, which in a real estate transaction, something always goes wrong.
56 obstacles from start to close.
Right. You want somebody that's here in town that you can walk into and see face to face. You know I'm a real person. I might run into you at the grocery store. I might run into you at church. Who knows? Our kids may play softball together.
You're there at closing.
Right.
But there's a hiccup. Well, what about the appraisal? This is the person you select and the company you select to obtain your loan and move you through from start to close and beyond is wickedly important.
Oh my gosh.
And you want that human factor.
Absolutely.
I know a lot of people say, but I just went online last night and I got approved in about 8 minutes.
Right.
I think they approve everybody online.
Right.
Because there's...
you can tell them whatever information you want. It doesn't mean you can back it up.
Like, I think I made that much last year.
Right.
You didn't send them your taxes.
Most people think they make a certain amount, and what we can actually use to qualify them for the loan is completely different.
Right.
Sometimes it's better, sometimes it's a lot worse. And those online quick pre-approvals, unless you've spoken to a real person who has looked at real documentations, your real credit report, your real pay stubs, you don't know if
tax
you don't
return.
know if that deal's going to fall apart at the last minute.
I think they're just wanting to get approved.
Yeah.
But then say, okay, I'm approved from this online person, or not even a person, online company, and then they start looking, and then there's just always, I don't know.
Oh, and you've got to call back into that 800 number and wait on hold for a while, and then get transferred to somebody else who isn't the same person that you spoke to.
Oh, I never spoke to a person.
Right.
Oh,
let me look up your situation.
Right.
When we talk, I'm going to get to know you a little bit. I want to know what's going on in your life. Why are you doing this? Why are you moving? Why are you wanting to buy your first house? What's going on? How many kids do you have? Do you need a cool bedroom for your daughter that you're adopting? I mean, I want to get to know those things. I want to have a relationship with my clients.
And as just as important as that, you're shopping for the loan that best suits that family.
Yes.
And not just a general blank slate of, yep, you're approved.
Yeah, exactly. Right. And what I have to offer is likely going to be different than what other lenders have to offer. So I have a client that was referred to me by their realtor a few weeks ago. He is a U.S. Army veteran, and that makes him eligible for a VA home loan. He also gets disability, so he doesn't pay the VA funding fee, which is huge. So generally speaking, if you're eligible for a VA loan, you probably should use it because it's just that great of a program. Mm-hmm. Well, the lender that he had been referred to originally said, VA rates aren't that good right now. You're really better off with a conventional loan.
Whoa.
And potentially that is the best that she had to offer, because for a while this spring when the pandemic hit, FHA and VA loans, nobody wanted them. They're riskier. And, a lot of our lenders just said, hey, we're going to price ourselves out of that game. So potentially this is really what this lender, the best that she had to offer.
Sure.
But he came back to me and here were his options. Use her loan, putting 20% down and having a mortgage payment of, I want to say $1,700 a month. Or he could switch to me, do a VA loan with 0 down and still have a payment of $1,700 a month.
Which would you choose?
Do you want to keep $50,000 in your pocket? I mean, it's the same. Or he could say, I still want to put that down payment. I want to have that equity available in my house should something happen. And his payment was $350 a month less. Mm-hmm. That's a car payment. That's saving for college. That's huge for your retirement account. And when you do this once every 5, 7, 10, 20 years, you don't know that you're not getting the best deal for you. You need to talk to somebody that is an expert in this business.
And does it day in, day out, eats, sleeps, drinks, and gives 150%.
Absolutely.
Like your full-time realtor. So full-time realtor, folks, because the market changes every hour, and they darn well better know what they're doing. Same with the lending, right?
Yes.
And I love your passion. Like, I'm looking at you, and you're like, I got so much to say.
I do.
Because we need to educate the public.
Right. People don't know.
People can shop. There's nothing wrong with shopping.
Right.
There's nothing wrong with interviewing 3 full-time agents.
Yep.
There's nothing wrong with interviewing 3 local lenders.
Right.
Like she said, they offer different products. They can provide different services. So
everybody has different profit margins.
Yeah.
Potentially, we're offering the same product that's going to the same investor, but I'm going to make 2 points on it, and they're going to make 5. You're not going to get the same rate.
Yeah. It's okay to shop, right?
It's okay to shop.
What's your most asked question, Trish?
People ask me all the time, what are mortgage rates today? And I always look at them like, really? I need more information than that. I need more information. Mortgage rates change all the time.
Like the stock market.
Exactly like the stock market. So generally speaking, if the stock market is up, mortgage rates are also up. So it's like an inverse thing. If you're happy about the stock market, if you're happy about your retirement portfolio, you're probably not so happy about mortgage rates. But on the flip side, when the stock market's struggling, people are putting more money into bonds, and that means mortgage rates are going to be better. So this spring, when the pandemic hit, whoo-wee, rates got good.
Rates
got so low.
Tell us how the pandemic has affected maybe your business and I mean a lot, I know, but how has it affected the mortgage industry?
Well, rates definitely dropped with the change in the economy and the uncertainty of everything that we faced. People took their money out of stocks, put them in bonds, so mortgage rates got a lot better. Now, there was also a whole lot more complicated stuff going on that hasn't ever happened. So a lot of investors didn't really know what to do. And they were like, this has never happened before. The 10-year treasury usually trades with mortgage bonds, and they're not doing that. And we don't really know what's going on. And that's way more than most people will ever understand.
I was going to say, tell us more about that.
Right. Most people don't care.
Right.
Basically, what it means is we don't know what's going on right now. We've never lived through a pandemic, so we don't know how to price. So there was a couple weeks where rates were really great, and then they shot up when nobody expected them to. So they're like, I was working on your loan, and now all of a sudden your rate's higher, and we shouldn't lock in yet. And then they changed again, and rates got down to the lowest I have seen them, 30-year fixed rates in the twos. But so many different things impact what mortgage rate is available to you, the type of loan, the amount of money you put down, what your credit score is, how big your loan amount is, how much profit your lender's making. There's so many different factors. I can't just say, oh, rates are this today. It's not that simple.
Right. So much unpredictable.
Very unpredictable.
Is unpredictable, even especially in today's world.
Yeah.
I swear if we would been out of the somewhere off the grid for a month or two, and you come back, you'd swear you were on another planet.
Oh yes.
Yeah, but that's everybody feels that way. I'm sure we've all this has all affected all of us in one way or another.
Yeah. I will say, with rates being so low, almost everyone is eligible to refinance their current mortgage.
Whoa. Let's say that again.
So almost everyone. The statistic I read was 75% of homeowners have tappable equity, meaning they have more than 20% equity in their house and an interest rate higher than 3.5%.
So that's ideal.
Well, so most of those people, if you have an interest rate higher than 3.5%, you have more than 20% equity in your house, you have money you could take out, still lower your rate,
and have a little bit of cash for.
And you could have cash. You could put it in an emergency fund.
Use it if you temporarily have a job hiatus.
Exactly.
For mortgage or rent or something.
Exactly. Mm-hmm. Exactly. So
is that the same with a non-owner occupied?
A little bit different in those situations.
Okay.
And I don't know the statistics on how many folks are eligible.
So the reason I ask about non-owner occupied is if you have an investment property or a second home that you don't live at 100, it's not your primary residence, it's a secondary residence, you would then get a non-owner occupied loan, and those interest rates are generally a little bit higher than the. And
especially in this time of uncertainty with the pandemic, everything that has an added layer of risk has kind of been amplified.
So that would be the investment,
Yes.
Okay.
So if you are in financial strain, you're going to pay the mortgage on the house you live in first.
I see.
Right? So those are less risky than the investment properties. If something were to happen, you're probably going to pay that last, because if it got foreclosed on, God forbid, that doesn't affect where you live.
Or that renter hasn't paid, but,
right.
Just on more unknowns. Mm-hmm. Yeah, indeed. So is it true that a lot of people think that one needs 20% down. So,
not at all.
A family's looking and they're like, dang, we need $40,000 for this $200,000 house. Let's let them know again, it has to be right loan for the right fit for your situation, your situation.
Right.
And that's why speaking to a local person that who will come to closing or meet you at a coffee place or meet you in a parking lot and talk through the car windows together, whatever
we have to do.
It's important for local, one, because one needs to support local, but two, they're nearby and available. Mm-hmm. It's so frustrating when you try to call an 800 number and get someone who's not really in the office, but they're trying to transfer them to their house.
Yeah.
And
Don't you hate that extension? Press 1 for whatever.
Yeah. So,
I give you my cell phone number. Right. You want to text me? Great.
So
you want to email me? Great. Whatever. That's all fine. I'm going to communicate what's best, whatever the client prefers.
Right. And everyone has their different methods.
Absolutely.
But the point is availability.
Yes.
And accessibility.
Yes.
You can be, someone somewhere, they have a question they're going to ask you, you're going to answer.
You may get my kids in the background on Sunday afternoon, but no one cares. If you're putting an offer in, you need to know the answer.
But that makes you a human.
It is.
So,
yes.
And you are a human, aren't you?
I am.
Okay.
Mm-hmm. Last I checked.
So
you asked about down payment.
That's where
Let me go back just a second.
Yes.
So I get asked a lot, how much money do I have to have
what
for
do
my
I
down
need?
payment?
I only have $5,000.
Yeah.
Well, how much house can you afford? Let's dial it. Let's work it backwards.
We're going to work it backwards. Yeah. A lot of people think they need 20% to put down.
So many people think that. Let's tell them.
It's ideal.
You don't need 20%. It is ideal for a lot of reasons.
Here's the main reason why it's ideal. If you put 20% down with a conventional loan, you do not pay private mortgage insurance. So,
and that equates to approximately how much per month on a $250,000?
Totally depends on your situation, kind of like rates.
Whoa.
Yeah.
Don't ask.
So if you put 20% down, you avoid private mortgage insurance. There's different ways to structure that.
Also called PMI.
Also called PMI. You can pay that in one lump sum up front. You can pay it monthly. You can have the lender pay it. You can do a combination.
If it's below 20%.
If you're putting less than 20% down.
You've got to pay that in some form.
Now, here's the thing. It does nothing for you, the homeowner. Nothing. It protects the lender. If you were to default on the loan, they have insurance against the money that they lent you.
Gotcha.
But you, lucky homeowner, get to be the one that pays it. Totally different than your homeowner's insurance or your hazard insurance. That does protect you. If your house burns down, your homeowner's insurance will protect your house and your belongings.
PMI mortgage insurance.
PMI does not. Protects the lender.
Right.
So you put less than 20% down, you have to pay it in some way, shape, or form.
It is removed once you reach your 20%?
In conventional loans, yes.
Okay. See, so many things to know. You almost wouldn't you just want someone driving your bus of mortgage lending that's nearby and knowledgeable and does this 24/7?
24/7,
right.
Yeah. Sometimes my kids go, Mom, do you have to go work?
It's
just
I want
upstairs.
to, kids.
I mean, yeah, and I love it.
I'll still give you a bath when it's time.
Yeah, yeah. So a lot of people, especially first-time buyers, they're doing 3% down or 5% down. Now, there definitely are options to do no money down, but that's something you need to consider on if that's the best decision for you. Maybe it is. Maybe keeping cash in the bank is more important to your situation, and you don't mind not having any equity in your property. I would encourage you to talk with your realtor about what if something happens and you have to sell sooner than you anticipate and you don't have any equity. Are you going to be able to sell quickly? Is your house going to be worth more than what you bought it for?
I don't like to what if too much because she said ask your realtor, which I am, full-time real estate professional, because so many people get paralysis by analysis.
Oh, yeah.
Because it's you can't what if your life away.
You can't.
What if this happened? What if that happened? What if I did this? What if I did that?
Yep.
So really, it's today's the only day that matters. And if I'm on furlough until August 15th, and we need some extra cash to get us through there, well, then you're going to figure out the best. Yes. Okay, if you need 10 grand to get, or whatever you might need, well, let's put this much down.
Yep.
Are you cool with that?
Yep.
But you're going to be paying a little bit extra every month.
Absolutely.
So, I mean, there's ways to slice it and dice it. We have 2 minutes left. So just in an effort to wrap it up, but will you come back?
I would love to come back if you'd have me.
Of course. We've got so much to talk about. This is really interesting to people, and there's so much value and content and the unpredictable part. But the thing is, if you need to know what's going on today, you can call Trish. Number on the screen here. Because what happened yesterday,
it's not going to be what happens
in
tomorrow.
In the mortgage industry, it's probably going to be different probably by tonight or by this morning.
Yeah.
So Trish Reedy, thank you so much. And Trish is with Trusted Lending Center. Please connect with Trish on her socials. Let us know what they are.
I'm on Facebook, LinkedIn, Instagram. I'm on it all.
Just Trish Reedy?
Trish Reedy or Team Reedy.
Trish or Team Reedy. And that's Reedy.
Yes.
Good.
Yeah.
So thank you so much. If you're enjoying what you're watching here, folks, please subscribe to our YouTube channel, Letty Ann and Associates Real Estate Services. Nothing pleases me more, well, there's a few other things, than providing value to the consumer, answering their questions, being proactive when it comes to real estate, which is your biggest asset. So thanks for tuning in, and we'll see you again on our next episode.